Hello, Shade with secretsoftaxlieninvesting.com with information today about Florida tax foreclosures and how tax sale investing works in the state of Florida. Now, we can find homes in Florida sometimes for as low as $5,000 to $10,000. If you're interested in seeing us do that live, we'll have a free webinar on the 5th of June that you can register for if you go to secretsoftaxlieninvesting.com. Now, let's talk about how Florida works and what happens in Florida with property tax enforcement. So let's start with the question, what happens when property owners in Florida fail to pay their property taxes? Well, Florida state law dictates how property taxes are issued and enforced, just like state laws across the country dictate how counties within their states enforce property taxes. So Florida state law is what determines it. Now, across the country, there are three different property tax enforcement systems that are used. There's a tax lien system, a tax deed system, or you could call them tax foreclosures, and a redemption deed system. Now, every state in the U.S. will use at least one of those systems. Now, Florida is unique because it uses more than one of those systems. It uses two systems. It actually uses a tax lien certificate system and a tax deed system. So it's the only state that I'm aware of that uses both in the way that it uses it. So how exactly does that work? Well, first off, let's just talk about a lien for a second. A lien is a form of security that is granted over an item to secure the payment of a debt or another claim. So in law, essentially the county has the right to place a lien or security interest over your property until it receives the property taxes that are owed. Now, the catch with the lien is that it prevents the transfer of ownership, so you can't sell the property while the lien's placed against it, and the lien can be used to foreclose on the property after a redemption period has expired. Now, counties have to pay for a lot of different services, things like public education and law enforcement, emergency services, utilities, and lots more. So they rely on that money from the taxpayers coming in. And if somebody doesn't pay the taxes, then what the county does is they'll create one of these tax liens for the amount that they owe in taxes and fees and place it against the property. Now, doing that prevents a property owner from being able to sell it. They know it can lead to redemption because that redemption period begins. At the end of that, they can foreclose. Now, the purpose for creating the lien is to enforce property taxes, but really, most importantly, it's just to collect money. That's all the county is really interested in, is collecting money. Now, this is accomplished through the tax sale. When the county holds the tax sale, individuals can buy these liens, and the liens have a 2-year redemption period in the state of Florida. Now, the majority of the time with liens, the property owners of the delinquent properties end up paying the taxes off at some point during the redemption period. So the majority of the time, what happens is the property owner pays the money they need to the county. The county can then remove the lien from the property and mail a check to the investor for their initial investment plus the interest rate that they've earned up to that point. Now, this is where Florida differs from other states. The first way they differ is in that they have an early redemption penalty. And what this applies to is any tax lien that redeems within the first year. So it has a 2-year redemption period. If it redeems any time within the first year, there's automatically a 5% flat interest rate that's added onto whatever you would earn normally. They do this to help increase the return in the case that investment is very short in duration. So imagine if you were only earning 1% per month, which you could be if you were earning 12% annually, and the lien redeemed after 3 months. Well, a 3% return, even though it's only been 3 months, it's still not really worth the time and effort to do it. But because it occurred within that first year, you would automatically add 5% to that flat 5%. So rather than getting a 3% return, you would get an 8% return in the state of Florida, which is quite a bit better than the 3%, and dramatically changes how the investment looks overall. So the early redemption penalty is the first part. Again, that applies to any lien that redeems in the first year. The second is the county officiated foreclosure that takes place following the end of the redemption period. In most tax lien states, At the end of the redemption period, the lien holder has the right to foreclose on the property, and they can use that lien to initiate the foreclosure process. In Florida, what happens is the county initiates the foreclosure process and then offers the property up at auction as a tax deed, as a foreclosure. If the property's sold, then they'll collect the money from that and use that money to pay off the lien holder that has liens against the property. So the funds from the auction are essentially used to pay off any lien holders that exist. And any excess funds beyond what's owed in property taxes is put back on the books for the property owner, and that's what we would know as an overage. So when you're looking at overages, or if you've heard of overages, that's what it is. It's when the property sells for more money than what's owed in taxes and fees, and the excess amount is placed back on the books. With that being said, let's quickly just look at some of the examples here. Properties that have sold in the last 30 days. I wanted to show you some amazing examples. This commercial property here, it's on a nice busy road. It's got a couple businesses around it. This actually sold for $15,000, just barely over the opening bid amount. It basically got an opening bid is what it really got. So it sold for $15,000. I'm not sure what the value is on the property right now, but certainly most of the properties that I've seen in the area are assessed way under what they're actually worth. Or this property, which sold a couple weeks ago for $5,000, didn't even get a minimum bid. It went to the certificate holder, which means that it didn't get an opening bid. It ended up going back to the certificate holder, which they took the property. So for $5,000, which is what they essentially paid in tax liens, they were able to acquire this property, which estimates out at about $80,000 right now. It's really quite a steal. This property sold for $15,000 a couple weeks ago. It currently estimates out at about $52,000. And here are some properties that are scheduled to sell at auction in the next 30 days. Like this property right here, which is opening up on the 18th of June for $5,500. Currently is estimated to be worth about $73,000. Or this property that's opening up at $5,100 on the 18th and is estimated to be worth about $70,000. Or if you're into large pieces of land, I think this is about 15 to 20 acres. I'd have to look to see exactly, but you can see the area in the red is up for sale. An opening bid of $38,000, assessed value of nearly $500,000, and I wouldn't be surprised if that's pretty low. It's also an area that has been developed, as you can see around in some of those other areas. That's just if you're into raw land. Or condos. This condo right here scheduled to auction on the 12th, and it will open up at $10,800. It has an estimated value right now of $173,000, and as you can see from the picture, this is an oceanside condo. It's a nice condo, upscale condo next to the ocean. So amazing properties. Or this property opens up on the 18th for $7,000, estimated right now to be worth about $61,000. Again, we're showing you a lot of examples here of homes for anywhere from $5,000, $10,000, $15,000. This property right here will open up at $15,000. It actually looks like it's a duplex. It's currently estimated to be worth about $111,000. The owner right now, you can see it says right there, buy owner for $50,000. The owner's probably just trying to blow it out because they owe a big tax bill, and they know they're going to lose the property, but they don't want to pay the tax bill, or maybe they can't pay the tax bill. So they're trying to sell a property to get something out of it. That at least is what might be happening. But this property would be a great rental, and it opens up at $15,000. If you'd like to see more properties like this and really talk more about the absolute cheapest way to buy real estate, hands down, no question about it, it is absolutely the cheapest way to buy real estate. If you'd like to learn more about it, go to secretsoftaxlieninvesting.com, or you can also go to the link in the description. We'll have a free webinar on June 5th you can register for, and we'll have more following that. So if you'd like more free training information, go to secretsoftaxlieninvesting.com.